Let us see the next question. The following accounting information and financial ratios of PQR Ltd relate to the year ended 31st of December 2022. So we have been provided with certain accounting information and financial ratios of the company for a particular year 31st of December 2022. Information is provided to us. GP ratio is 15% of the sales. Net profit ratio is 8% of the sales. Consumption of the raw material will be 20% of the works cost. Direct wages is 10% of the works cost. Stock of raw material is 3 months of the consumption. Stock of finished goods is 6% of the works cost. Average collection period is 60 days. They have given a clarification, but that clarification is not required to be given, that all sales are on the credit basis, because that assumption is always made by us. Financial ratios, fixed asset to sales 1:3. Fixed asset to current ratio, that is current assets 13:11. Friends, if at all we have been provided with is-to information other than 1, then in that case it carries an importance. If it is is-to-1, it does not carry any importance. Current ratio is 2. Long-term loan to current liabilities again 2. Capital to reserves and surplus is 1:4. If value of the fixed asset as on 31st of December 2022 amounted to rupees 26 lakhs, prepare a summarized profit and loss account of the company for the year ended 31st of December 2022 and also balance sheet as on 31st of December 2022. So there are two things that we are required to do. I request all of you to go through the question, then we'll discuss how to do it. Let us have understanding that how to make calculation of answer. Dear students, over here in the entire question one value is given and the value is provided to us with respect to the fixed asset. It is an amount of rupees 26 lakhs. Okay. Now you can see that the question is providing the information fixed asset to sales. So you can compute the sales, yes. Fixed asset to current assets. So you can compute the current assets, yes. Once you have current assets, using the current ratio, you can compute current liability, yes. Using the current liability, can you compute the long-term loan? Yes. After making this much calculation, we will see that what sort of additional calculation we can make from the given information. So let us make this much calculation at least. Okay, you can see that you have computed the sales. GP ratio is there, so you can compute GP. NP ratio is there, you can compute the net profit. Once you have the sales, collection period is there, you can compute the amount of the debtors also. First of all, let us calculate this much and then we'll see that how we can use the remaining information to get the remaining data. Please write down answer along with me because all the calculations are very simple to understand. So we can make the calculation of, first of all, calculation of sales. To compute the sales, we will use the information of fixed asset to sales. It is 1:3. So 1 divided by 3. So fixed asset upon sales is equal to 1/3. So as far as the fixed, that is sales is concerned, it is 3 times of the fixed asset. Sales is 3 into fixed asset. Divided by 1 does not make a sense. It is an amount of 3 into 26 lakhs. That comes to 78 lakhs. This is the way first of all we can compute the sales value. Next, information is given the fixed asset to current assets. So the second working that we can compute is the current assets. Second is calculation of CA current assets. For that, say we will apply the formula like this. Fixed asset to current assets is equal to 13 is to 11. So it is 13 divided by 11. So fixed asset upon current assets is equal to 13 divided by 11. Okay. You can see that the question is providing the information that the fixed asset is 26 lakhs. So current assets is equal to, current assets is transferred on the opposite side, fixed asset into 11 divided by 13. That is the way we will have formula. Fixed asset is 26 lakhs into 11 by 13. So 2 lakhs into 11, that comes to 22 lakhs. This is the way we can make the computation of the current assets. The next information is the current ratio that will help us to make the calculation of the current liabilities. So I am writing third. Calculation of current liability. Current ratio is equal to current assets upon current liabilities. So current liabilities is equal to current assets upon current ratio. What is the current assets? It is an amount of 22 lakhs. And what is the current ratio? It is 2. (22 lakhs divided by 2), it comes to rupees 11 lakhs. This is the way you can make the computation of the current liability, very simple. Then we can compute the long-term loan. Next is fourth. Calculation of long-term loan. So in that, long-term loan to current liability is equal to 2 is to 1, that is 2. So long-term loan divided by current liability is 2. Long-term loan is equal to current liability into 2. What is current liability? It is 11 lakhs into 2, that comes to 22 lakhs. This is the way long-term loan can be calculated. Now friends, importantly what you can see, on the asset side we have the fixed asset, we have current assets, so the total assets that we have. On the liability side we have current liability, yes. Long-term loan, yes. So the balancing figure of the liability side will be net worth. And you can see that the question is providing us the information about capital to reserves and surplus value. So the net worth can be split into this proportion. Suppose the net worth is 5 lakhs. It means that the equity share capital is 1 lakh, reserves and surplus is 4 lakhs. This is the way first of all we will split both of them, that is we'll compute the gross value and then it will be split between both of them. So fifth value, write down calculation of net worth. In that write down total of the liability side is equal to total of asset side. This is what we understand. What is the total of the liability side? It is net worth plus long-term loan plus current liability on the asset side. fixed asset plus current assets. So net worth is equal to, on the asset side, fixed asset plus current assets minus long term loan minus current liability. What is the amount of the fixed asset? 26 lakhs. What is current assets? 22 lakhs. What is the long term loan? Long term loan is 22 lakhs once again. And current liability is 11 lakhs. So use your calculator. 26 plus 22 minus 22 minus 11. It comes to 15 lakhs. This is the way the net worth is calculated, and then it will be split between equity and reserves and surplus. So sixth, calculation of capital and reserves and surplus. Capital, reserves and surplus. It is 1:4. The total is 5. This total is 5 representing this 15 lakhs. So 15 lakhs upon 5, that comes to 3 lakhs. 3 lakh into 1, that is 3 lakhs once again. And 3 lakh into 4 is 12 lakhs. This is the way we can have the bifurcation. So 15 lakhs upon 5 into 1, 15 lakhs upon 5 into 4. This is the way capital and reserves and surplus can be calculated. So friends, all the financial ratios information which have been given, that we have done it. Now let us go to the accounting information, wherein GP ratio is given, NP ratio is given. So we can compute the gross profit and net profit. 7th, calculation of gross profit. How to find it? Sales into GP ratio. What is the sales value? Sales value is an amount of rupees 78 lakhs into 15%. So the gross profit is 11,70,000. Next will be calculation of the net profit. That's very simple once again. Sales into NP ratio. What is the sales? 78 lakhs. Net profit ratio is 8% of the revenue. 6,24,000. This is the way the net profit is calculated. Next, we can compute the debtors value using the average collection period, which is provided to us as 60 days. Dear students, over here you have to understand logically that say the average collection period is calculated using average debtors, but sufficient information is not given. So whatever the debtors that say we compute over here is assumed to be the closing debtors. So ninth information, calculation of debtors. Average collection period is equal to 365 days divided by annual credit sales into debtors. So amount of debtors is equal to annual credit sales divided by 365 days into average collection period. So it is 78 lakhs divided by 365 days into average collection period is 60 days. So the final answer is 12,82,192. That is the way we can make the computation of answer. This is the amount of the data that we have. Now dear students, as per my understanding, till this point of time, there is nothing great that I have explained to you. Now the important point of the question comes. Why do I give this clarification to you? The reason that I am giving this clarification is that in your revision, you should mark that these are the important points that we have from examination point of view. That bifurcation is very necessary from your examination point of view. Now friends, we can see that over here, the information is given the raw material consumption is 20% of works cost. Direct wages is again a certain percentage of the works cost. Stock of the finished goods is again a certain percentage of works cost. So works cost is what we understand is required to be computed because these values depend upon works cost. One more thing, we can see that the stock of the raw material is given to us as 3 months of the consumption. So once you compute the raw material consumption, you can compute the stock of raw material. It means that the calculation of the works cost is the important point, and that is where we are stuck up. Let us understand and say how to make the calculation of that answer. Dear students, the term works cost is also considered to be the factory cost, and it is calculated technically like this. It is direct material consumption, or we can say that raw material consumption plus direct wages plus factory overhead plus opening WIP minus closing WIP. This is the way we make the computation of the works cost. This is the formula that we have. However, in the question, sufficient information is not given with which we can make this calculation. So institute has provided a very simple answer. They have considered COGS as works cost because no information is given for that. Sales value 78 lakhs, yes, minus gross profit that we have calculated, and difference of both of them is considered to be the works cost. Technically the works cost is this, but since sufficient information is not given, COGS is considered to be the works cost. That is what we understand. From examination point of view, there are fair chances that you have to make certain assumptions like this for the purpose of doing answer. Write down answer the question. Heading right down, calculation of works cost. In that write down directly or indirectly, comma, sufficient information have not been given to compute works cost, full stop. So we are assuming that COGS, COGS stands for cost of goods sold, is works cost, full stop. That is what we understand. So it is sales minus GP. What is sales? 78 lakhs minus gross profit. The amount of the gross profit is 11 lakh 70,000. So COGS is 66 lakh 30,000. This is the way the COGS is, works cost is calculated. Friends, once we compute the works cost, calculation of the raw material consumption, calculation of the direct wages and finished goods stock would be very simple. And once we compute the raw material consumption, based on that, we can compute what is the stock of raw material. So write down further calculation of raw material consumption, which is equal to 20% of the works cost. So works cost into 20%. 66 lakh 30,000 into 20%. 13 lakh 26,000. Next is calculation of the direct wages. It is again works cost into 10%. What is works cost? 66 lakh 30,000 into 10%, 6 lakh 63,000. And lastly, we'll compute the finished goods, which is provided as 6% of the works cost. Works cost is 66 lakh 30,000 into 6%. 3 lakh 97,800. This is the way we'll make the calculation of consumption of raw material, direct wages and finished goods. Now we'll compute the stock of raw material based on the consumption of the raw material. So calculation of raw material stock, it will be found as raw material holding period is equal to 12 months divided by raw material consumption into raw material stock. So now stock of raw material is equal to, it is transferred on the left hand side, raw material consumption divided by 12 months into raw material holding period. The consumption of the raw material is 13,26,000. Divided by 12 months into raw material holding period is 3 months. $3,31,500. This is the way stock of raw material is calculated. Now the question is finally preparation of the P&L account and balance sheet. So I request you to prepare the P&L account and you are required to prepare the balance sheet. Then I will do working for you. So we understand that preparation of P&L account, profit and loss account from 1st of January. So preparation of the P&L account from 1st of January 2022 to 31st of December 2022. Friends, over here for preparation of the P&L account we do not have much information. We have gross profit information. The gross profit is an amount of 11,70,000. Then we have the net profit information. You can see that the net profit ratio is 8%. So 78 lakhs into 8%, 6,24,000. We do not have information for depreciation. We do not have the information of like interest or no such information is there. So balancing figure will be expenses. So 11,70,000 minus 6,24,000 is 5,46,000. That is the way it is required to be kept as balancing figure. Please write down the answer. Yeah, once you complete this P&L account, please try to complete the balance sheet. So now final answer is balance sheet of Messrs. PQR Ltd as on 31st of December 2022. We will have liability side, amount, asset side and amount. That is what we have. On the liability side we will be having share capital. That is what we already have calculated. It is an amount of rupees 3 lakhs. Before using the accounting ratio information, we have made this calculation. So as far as the capital is concerned, it is 3 lakhs and the reserves and surplus, it is 12 lakhs. Next is long-term debt. It is an amount of 22 lakhs. And we have the current liabilities. It is 11 lakhs. This is the way we have the liability side of the balance sheet. 3 plus 12 plus 22 plus 11, 48 lakhs. On the asset side, fixed asset information is given ready-made to us. that is an amount of rupees 26 lakhs. Next is the raw material stock, which has been calculated over here. It is 3,31,500. Next is the finished goods stock, which is 6% of the works cost. It comes to 3,97,800. Amount of debtors. Debtors have been calculated by us. It is 12,82,192. Now friends, the remaining amount of the current assets can be termed as other current assets, or otherwise say you can mention that it is the cash balance. Either of the way the presentation is acceptable. We know that the current assets is 22 lakhs minus stock of raw material 3,31,500 minus finished goods stock 397,800 minus debtors is 12,82,192. This is the way we are required to make the calculation of answer. So 22 lakhs minus 331,500 minus 397,800 minus 12,82,192. So 188,508. This is the way the balance sheet is tallied. It is 48 lakhs on both the sides. (26 plus 22), that is it is 42 lakhs, 48 lakhs. Importantly friends, over here we understand that we are required to split the values so far possible. If you mention the current assets of 22 lakhs, even in that case the balance sheet is tallied, but that is not the answer which institute is expecting from you. Institute is expecting from you to write the split so far possible. So friends, over here there are two types of ratios provided to us. One is the financial ratios and another is the accounting ratios. Fixed asset value is given to us. Based on that sales, current assets are calculated. Using current ratio, current liabilities are calculated. Using current liability, long-term loan is calculated. Total assets is equal to total liabilities. So net worth calculated. It is split between capital and reserves and surplus. With the sales, GP ratio is found, NP ratio is found. With the sales, data are calculated. Simple, 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 simple. Now the important point comes. Works cost. Works cost is understood to be COGS because the adequate information is not given, with which technically whatever the works cost that we can compute. So the COGS is 66,30,000. Then it is divided into, that is based on that we compute consumption of raw material, direct wages and finished goods. These three things are calculated. We can see ultimately that the information of the direct wages becomes useless. We found it for the no reason. But many a times when you are making calculation, you may not be aware that this information may not be required. Stock of raw material equal to 3 months of the consumption. In P&L account, we don't have the sufficient information, so the balancing figure is expenses. Balance sheet is prepared from the calculated values. On the liability side, equity share capital, reserves and surplus, long-term loan and current liability. No other bifurcation is available. On the asset side, good bifurcation is available. Fixed asset, stock, finished goods stock, debtors and cash and bank or other current assets. This is the way we are required to do answer.